Hi, Charlie. I hope you're having a good Monday morning. It is freezing outside, maybe 10 degrees, and we have the radiator on in this room, but there's no heating at the moment, so every minute that passes, it gets a little bit colder. But anyway, I just wanted to update you on the second day of my video polling experiment. This poll again was posted last week on LinkedIn, and it just closed today after the 7-day voting period. And the question is, has insurance become too expensive? A very relevant question considering the California fires are causing home insurance premiums to skyrocket across the country, not just on the West Coast. So anyway, there were 3 answer choices: yes, no, and I'm not sure. 78 people voted on the poll, and to no one's surprise, the most overwhelmingly popular answer was yes, with 87% of voters choosing it. Only 4% said no, and only 9% said I'm not sure, so a pretty unanimous decision overall. Insurance has become too expensive. We have car insurance, home insurance, life insurance, health insurance. It seems like more and more of our paychecks go to supposedly paying to alleviate future financial disasters and health catastrophes that don't seem to materialize that often, and when they do, they're still devastating, and you usually have to pay at least something to take care of them. For instance, a copay for health insurance. Anyway, here are a couple of statistics that I thought you might find interesting. While the numbers are definitely not in yet, and the fires have not been fully fought off, it's estimated that the Southern California wildfires will cost insurers anywhere from $50 to $150 billion. So that means the insurers will have to pay these huge sums of money out as, compensation to people who have lost their homes but been protected by that insurance. And obviously that is going to cause premiums to skyrocket, even for the people whose homes in California were untouched by the wildfires. They're going to have to pay higher premiums. Some insurers might actually stop underwriting policies in that area because they might consider it too risky, and you can't really force an insurance company to offer insurance to a particular area, so that's going to be quite a catastrophe for any homeowners left in the area, even if their homes are still okay. But the U.S. insurance industry employs 2.8 million people, and while we're all frustrated by insurance companies at one point or another, it's probably not best to wish for the unemployment of 2.8 million people. So let's just hope the industry can kind of figure out a way to provide that protection for the homeowners of all kinds, while still, keeping the lights on, having that black ink profit. Berkshire Hathaway, the conglomerate owned by the famous long-term investor Warren Buffett, earned $74.7 billion in revenue from insurance. It kind of makes sense because it's a relatively stable industry, at least when there aren't a bunch of catastrophes happening. Insurance companies just collect regular monthly premiums. They pay out a certain portion of their earnings out to policyholders when they need it. So in the right conditions, it can be a pretty lucrative and stable revenue stream. In the United States, we have 260.7 million life insurance policies in force. Life insurance is basically when you pass away and you have life insurance, a beneficiary, for instance, your spouse or your child, gets a payout kind of based on the premiums that you've paid, that you've contributed to the insurance company's pool for years. They get a payout to sort of tide them over for a couple of years, going to get back on their feet financially, so to speak. As for health insurance, 305 million Americans have that, which seems like a pretty large number, but that leaves about 50 million Americans without health insurance, and that is rather bad because health emergencies happen all the time, and healthcare costs have skyrocketed in the past few decades. Additionally, a lot of the preventative care, for instance, my biannual dental visits to get my teeth cleaned, my yearly optometrist appointments to check out my eyes and get new glasses, my yearly physical checkup where I go to the doctor and they weigh me, take my blood pressure, run some blood tests. Those are pretty important for preventative care, for kind of catching those health issues as early as possible and trying to address them. And also the better health that you're in, that you can kind of prove through those doctor's records, the lower your health insurance premiums are. I'm not sure the exact correlation, but the point is that preventative care is very important. So being uninsured and having no health insurance is a massive risk in today's day and age. So anyway, I hope you enjoyed my little recap about the U.S. insurance industry. We're both going to be praying, Charlie, for the victims of the California wildfires, praying for them to rebuild, praying for them that if they have insurance, their insurance follows through on properly compensating them for their losses. Catastrophes like this happen all the time, and even though insurance can be frustrating at times, it is essential to kind of mitigating a lot of life's risks that in the past would have just wiped you out completely. You would have lost your home in a fire and got no compensation and would have had to start rebuilding from scratch. All those years of building your wealth through that home would have been lost. But at least with insurance, you get some form of compensation. Is easier to rebuild, kind of easier to get back on your feet. So praying for everyone affected by the California wildfires. And thank you again, Charlie, for listening. I know this video was pretty long, but I appreciate that you were so engaged. And see you tomorrow for poll day number 3. Bye.